Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Chicago wheat and corn. Chicago wheat. The main activity here during the summer had been the fall below the significant neckline extension, currently at 656, of the small October 2020 to November 2020 head and shoulders top, which you can see highlighted on my daily chart in dark blue. This neckline has a fairly wide congestion area clustered around it, formed from late April to mid-July, and from about 609 up to 679, including the declining gold-coloured long moving average, currently at 645, and below it now the declining mauve-coloured medium moving average, currently at 619. It has been this congestion area that had pressed down on top of the rallies throughout September, October, November, and even now in December. A few weeks ago I pointed out, and I quote, "We've also seen a pattern form over the last few weeks. The pattern I have in mind is an unusual one. It's one that immediately springs to my mind but looks in the wrong place. And that is to see the whole of the late May, end of July action as a double top with a neckline at the same neckline extension of the small but influential October to November 2020 head and shoulders top." End of quote. This is called a cat's ears pattern. In essence, it is a double top, but in an overall previously moving downwards market. It is not that rare, but enough that it took me for a while to remember its name. The potential below for a cat's ears pattern is the target at X2 in the 502 zone. However, before we even look down that far, it is worth looking at some interesting supports below, notably and on a closing basis, the May 2023 low at 587 3/4, which is just below the March 2021 low at 592. Then the September low at 570 plus the December 2020 low at 566, and again only on a pure low basis the September low at 570. Last month we saw prices punch down through these, punching down as far as just below the December 2020 low at 566 last week, but failing to make two consecutive closes below it before storming back up with a weekly key reversal up last week. So last week was a weekly key reversal up that pushed prices through the declining medium moving average this week and is now using it as a support, reaching up to the slowly declining long moving average above, but halting as the long moving average caps the recent attempts higher, well, so far. It is this point I feel obliged to introduce a mea culpa, I am to blame moment. Last week I said the following, and I quote, "Now recently I laid out an idea for a mid-September based possible horn bottom, possibly even a triple bottom with October's action, though this is only feasible on the continuous daily charts. I gave a primary target X up in the 640 area and a secondary harder to reach target X1 in the 650 area. I gave these a short window of time to which to be achieved, and unfortunately the market did not have the appetite for them or the pattern, so I will retire them both after this commentary." End of quote. Well, if I had only waited one more week, as you can easily see, the market has achieved the primary target area at 640 and has just about reached the secondary target at 650 with a high this week of 649.5. I think somebody's playing jokes with me there. Just goes to show that sometimes I should be more conservative and allow a little more time. Looking ahead now, well, we obviously have the long moving average on top and the medium moving average below. But I'm more interested in seeing the reaction of the market to the March 2022 to date downtrend, currently at 660. That is just above the long moving average and the neckline as well. Back in July, even approaching this downtrend was enough to turn prices back down. I'm wondering if the same may happen this time, and if not, will there be buy stops located a little above it? Chicago corn. The medium moving average, currently at 495, highlighted in mauve on my daily chart, has been an effective cap on this market since about March, especially back in June, then recently in October, November, and now December. Even when it was penetrated, it still held down the market. The recent capping action in October resulted in a push down below the mid-September to late October lower bull channel line, highlighted in dark green on my daily chart. This move effectively put an end to the late July potential rounded bottom pattern, and also changed the aspect and broke the follow-on higher to a larger pattern here, a May to September descending wedge pattern. In addition to the declining medium moving average, we also have the same old congestion band between 490 to 498 that includes the 2021 low at 498, as well as the flatlining short medium moving average, currently 494, pressing down on the market. At this point I'd like to introduce a new factor, highlighted in bright red on my daily chart, is the July to date downtrend, currently at 494, and the flat support, also highlighted in bright red, since July, which is currently at 470. Together they make up a descending triangle pattern, possibility let's say, rather than pattern, a quite far advanced descending triangle possibility. So to be aware of the force breaks of such an advanced pattern, the question now is whether the support below will hold or the resistance above. We seem to have some pretty strong overhead resistances, but below, the lows formed over the summer around 473, well, if 473 doesn't hold, well then we do have some congestion starting at 463, but it isn't that strong. And I'm concerned that the accumulated ammunition overhead from the descending wedge pattern and the bull channel, and now from the descending triangle pattern, well, they may punch down through all of it fairly easily. So for a third week now, it all now depends on the 473 zone below. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.